contestants, 2 investment ideas, 1 winner. What to do with 1K, presented by Blake's Business Minute. This is a one-of-a-kind investment show that anybody can implement. Each episode, we're gonna bring on 2 contestants, and they're gonna pitch investment ideas that can be easily understood and implemented with $1,000 or less. And at the end of the day, you know what I'm gonna do? I'm gonna put my money where my mouth is and invest $1,000 in the winning idea. And before we get really started, please go do me a favor. Please like this show and go subscribe to the Blake's Business Minute page. So now, without further ado, let me introduce our first 2 guests. Now this is the time you might normally see an advertisement, but since this is a pilot, we don't have any advertisers. So we're gonna do something a little bit different. We're gonna give something to you, the viewer. We're gonna give you a chance to win a 6-month subscription to the Wall Street Journal. That's $120 of value to you for free. All you have to do is follow these 4 simple steps. First, like this video. Second, subscribe to this Blake's Business Minute YouTube page. Third, drop a comment right here, drop a comment, your favorite business of all time. Could be anything, Amazon, Facebook, 1547 Critical Realty Systems. Anything you want, drop it here, just so we know that you're entered into the contest. And finally, go follow our Instagram page. That's Blake's Business Minute right here. You can see it, that's the tag, go follow it. And in exactly 2 weeks' time, we're gonna pick a winner and give somebody $120 worth of value, access to the Wall Street Journal for 6 months. That's an incredible deal. Like usually you're getting sold something here. Today we're giving you something. So please go do it, those 4 simple steps, and have a chance to enter to win 6 free months of the Wall Street Journal. First up is Marco Pena, recent MBA graduate from the SMU Cox School of Business. This fall, Marco is going to be re-entering the workforce as a wealth manager. Marco is essentially your go-to guy for all your portfolio management needs and has a broad spectrum of skills and experience guiding clients through the trials and tribulations of portfolio management. Marco, welcome to the show.
No, absolutely. Thanks for having me. It's a pleasure.
And our second contestant is Ryan Mitchell, another recent MBA graduate from the SMU Cox School of Business. Ryan currently works as a financial analyst for 1547 Critical Systems Realty, a data center real estate investment company, essentially making Ryan a go-to fountain of knowledge for all of your bleeding-edge technology investments. Ryan, welcome to the show.
Yeah, thanks for having me. Go Ponies. I'm happy to be here.
Now that you've met our contestants, let's give you a quick rundown of how the show actually works. Each contestant has brought an investment idea that could be absolutely anything they want. They can pitch stocks, bonds, crypto, baseball cards, or NFTs. Anything they think is a good investment with $1,000 or less. And for some added beauty to the show, I have absolutely no idea what my guests are going to pitch. So you're gonna get my real-time reactions to their ideas. The pitches are gonna be broken down into 3 sections. First, they're gonna give you an introduction to their investment. Second, they're gonna explain this investment and why it'll outperform / what returns they think that you can get. And thirdly, they're gonna let you know what the risks are. And to round it out, I will be dishing out a searing Q&A session to make sure these guys are on point. And then at the end, I'm gonna pick my winning idea and invest in it. $1,000 of my own money into their idea. Now let's get started. Marco, you're up first. What is your investment idea that you're pitching today?
My idea is actually the market itself. And what may seem like a boring investment, because for some people it doesn't sound as exciting as you would shorting the VIX per se. But for the average Joe, regular person who thinks of, I guess, investing with a little bit of, I wouldn't say scaredness, but not exactly the most aggressive approach, it's a relatively good investment. And the reason I'm saying that is because if you want to own Tesla, but you can't, deal with the risk associated, or you can't really buy Tesla outright, buy the market. Why? Because you inadvertently own Tesla. Same for Amazon, Facebook, Apple, Google, etc. Right? So when I view that as how do I get involved in the market without actually, picking 500 separate large cap stocks and owning all of those at once, what I like to think of a good market investment with the S&P would be the Spider S&P 500 ETF. Right, you can buy into it right now. I think it closed yesterday around $417-ish. Since I don't know, probably the past 5 years, it's grown pretty drastically. And I would say since its inception, I think it opened at somewhere around $48, and it's only been around 20 years, maybe a little more than that, if I'm correct. and you got really, really good returns on that. So for me and for someone who's just dipping their toes in an investment strategy, I think it's overall a well-rounded way to get comfortable with the markets, start learning about what drives certain forces and what makes outcomes deliver the way they do.
Gotcha. Pitching the market itself. Bold step, I like it. Ryan, I feel like you may have something a little wilder up your sleeve. Let's hear about your investment idea.
I have to preface by saying that while I do work in the tech space, I don't know that I would consider myself to be a crypto expert, but I am pitching a crypto play. So in crypto, there's not as much for the alternative coins. There's not as many indexes or ETFs like what Marco was talking about, but I'm proposing that you make your own. I'm proposing that with your $1,000, you buy 3 specific tokens of 3 different blockchain companies, right? So Polygon, Cardano, and Polkadot. And those 3 are going to be the ones that we can get into my investment a little bit more. But those 3 are going to be the ones that one of them will be at the cutting edge of where blockchain is going next. So it's not just about crypto like Bitcoin, it's really an investment in where's blockchain going and how is that going to develop in the future.
Gotcha. Very cool. It sounds like we have 2 very distinct but good investment ideas here that can be easily implemented with $1,000. So they played the game to start correctly. So nothing breaking up the show so far. Let's get into a little bit deeper. Marco, I want to hear what kind of returns you can expect to get from the SPDR ETF, from the S&P 500 as a whole. Over a 5-10 year outlook, what can you expect to get?
Yeah, I mean, over 5-10 years, like one thing to keep in mind, right, is that we use, oddly enough, as when we forecast future projections, we use history. And the thing about history is that things are drastically different than they will be in the future. So it's funny that we use that. But in the past, what you're typically looking at is an annual average return of about 10%. If you want to be safe with the true S&P 500 since inception in the 50s, it's been around 8%. Before that, it's the whole market as a whole, which is a little higher. But the SPDR ETF, I would say you're comfortably looking at 10% if we use history as what we use forecasting going forward. Obviously, that has some fluctuations. It could go a lot higher, it could be a little lower. But when I think of investing, I think of it as more of a long-term play because that's my goal. That's the game that I'm playing, right? So I think if this is something that you want to get into, you kind of have to answer the question for yourself and be very honest as what is it that you want? What are your goals specifically? If this is a 1-year short-term turnaround, maybe 10% on $1,000 isn't where you need to be. If this is a 30-year long-term thing, 40-year long-term thing, over compounding, the way compounding works for returns, this might be the play for you. Think about Warren Buffett's worth, $108 billion these days? He made, $108 billion, sorry. He made, I think the number is like 84 billion of that after he turned 50.
The power of compounding.
Power of compounding. So it all depends about what your end game is. And for me, a great quote that I like to live by, it's not about timing the market when to get in, but it's about time in the market. Because that's what's really going to generate the wealth for you.
Well said. Marco truly is a wealth manager at heart. Going to be doing big things in the future. Yeah. Ryan, you've just heard that inspiring pitch. It's your turn to talk a little bit about returns. I feel like your return spectrum might be a little bit different. Yeah, let's hear about it.
I'm sure whenever we get to the Q&A, I'll get ripped for what's going on in the market right now, which I'm ready for. I don't have any problem with that. But let me hit a couple points and I'll answer your question. Number one, I agree with Marco. I think that even in the play that I'm suggesting, that it should be more of a long-term play. A lot of people want to do, in and out with crypto stuff. But my play is not that. It's a long-term play, and I'll explain why. So cryptocurrencies and all altcoins, and I hesitate to say shitcoin. I don't know if I'm allowed to say that. Yeah. I'm saying it. You cut it out.
Shitcoins are the talk of the dead.
Yeah. All altcoins, right? The market's really down because there's a big correction going on right now for coins. But what I'm suggesting you invest in is not cryptocurrency. It's blockchain. And you may ask yourself, blockchain is a technology that everybody's talking about. Why isn't it prevalent everywhere? Why haven't the banks started using it full bore? What's going on with all that? The issue is scalability. Polygon, Cardano, Polkadot are all 3 companies, and we can get into the history of it if you want, but they're all 3 companies that are looking to answer the question of scalability. Right now, Ethereum can only do 13 transactions per second. Whenever Polygon, which is their version of an answer to the scalability issue, whenever it gets up running, it's supposed to do 100,000 transactions per second, so that you can go to a third world country and be, hey, we can use this, technology not only to do crypto or to do currency transactions, but we can do it for coding, we can do it for deeds, houses, all sorts of different things. You can use the technology, and whoever wins that race of the three that I'm betting on is going to be very well off, right? So my metric for returns, to roundabout get to the answer for your question, is Polygon specifically in December, it was about 10, 12 cents, right? And even during this market dive, it has gone up to about, I think right now it sits at about $1.52.
Okay.
Right? At its height a few weeks ago, it was at $2.80. So I mean, you do the market on that 10 cent, do the math on that 10 cents to $2.80, that's like a 200 times return. It's actually more, but just off the top of my head, it's like 280 or something like that, right? Roughly. So the returns long term when you hold this investment should be well in excess of 10, 15 times. Right now, we'll talk about risk, I guess, in a second. Sorry, I'm kind of into the mode, but that's where my returns are priced.
I like it. It's quite a speculative investment on looking into the future, but very interesting conceptually. So we're going to dive into exactly a little bit more of what those are in the searing Q&A section. But let's talk about risk. Every investment has a risk profile. Marco, your investment has a little bit of a safer risk profile. I'd love to hear a little bit more of your perspective on that risk profile of the market.
Yeah, so again, the what I view as a good thing and a positive outcome for investing in the market is that you are essentially diversifying your risk, right? They are established large cap stock companies, and they've met a lot of criteria being the S&P 500. However, it's not to say that things happen. Take a look at what just happened with COVID, right? Take a look at what happened with like Chevron, Exxon, all the oil companies that were once the largest companies in the S&P 500. Things do happen. However, you're able to diversify all of that risk because in the last year, the market was up, but it was truly only being held up by 5 tech stocks, right? If you had owned some of these other companies on their own, you probably would have lost a fair amount of value in your investment. However, the fact that you're able to diversify a lot of that risk off, it makes it more digestible to you, and you don't have to worry every single night about every single thing that your company's doing. Because in a sense, it goes back to the question that I always ask myself, and I tell people to ask themselves, and be honest, right? It's like, do you want to invest in something that's very risky because you have this $1,000 and it's just fun money that you're able to do so? Or is this something that means something to you and the outcome is something that's really important? Is it your kid's college fund? Are you gonna be able to sleep at night knowing that you have a high risk profile that one day it could be up 20% and the next day it could drop 30%? And that's why I think this is a very, very digestible risk profile, because you're able to see, and it's proven, granted again historical, that the market does tend to go up, and by staying in the market, you will achieve a greater outcome. And the risk profile is easier to take in than something that would be like a speculative stock.
Now let's get into kind of the riskier side. Ryan, let's hear about the risk of these cryptocurrency, these blockchain platforms that you're pitching. Let's hear about the risk of betting on the future.
Yeah, so investing in crypto blockchain technologies is a little riskier because you don't have 5 tech companies and $5 trillion in a year to hold up the market, right?
Fair point.
But one thing that I will say about my investment choice is that, as I said previously, the 3 that I'm having you pick as sort of a pseudo index, if you will, are easily going to be the 3 that are, one of them is they're going to create the multi-chain system, or the smart contract system that's able to scale the blockchain technology. One of them's going to do it. Each of the 3, we can get into the history, are all started by the guys who founded Ethereum. They're the people who have been in the space. They know the space. We can get into all of the risk profile whenever you get to your scathing Q&A, which I'm looking forward to. But my point is that the risk will be, let's say worst case scenario, Polygon doesn't cut it because Vasily can't do what he said he's going to do, and Cardano isn't going to cut it either, right? But it ends up being Polkadot because Eli Wood's killing it, right?
Yep.
And they're going to be first to market probably in the summers when they're supposed to roll out their multi-chain platform. I mean, that's not definitely, but they're moving the quickest right now. you might lose the 2/3 of the investment overall, right? But the returns that you would get on the other end are going to be much, much higher. I mean, Polkadot's like $30-something. You would at least get ×5 of your money in a year or something like that, which will more than cover the other two. And then if you continue to hold it, if they continue to implement that currency in different countries and all of that kind of stuff that goes with the technology being proliferated all over the world, then you could get a benefit. I liken it to the way that Amazon was whenever it first started, right? Amazon was nothing, and I think that they kind of dived out during the whole .com bubble, right? Whenever they
survived in advance.
They were only able to survive because they had a use for what it was they were providing. They did the book thing, right? And all the other .com companies were gone, right? So a lot of these crypto companies are going to be gone, right? But somebody who can scale the blockchain technology, that's something that's really useful. It's been the barrier to entry for blockchain being proliferated for all the banks, like I've said before, right? So that's something that is more of a high end. To sum it up, I guess, not as safe as what Marco suggested. Absolutely not. We're doing a little bit more of a riverboat gambling thing over here.
Gotcha.
Right? So you shouldn't invest more than you're willing to lose. You shouldn't invest more than you're willing to lose.
You have to be prepared for everything.
And I'm not a financial advisor and all of those types of things, but this is where whenever Amazon was killing it, right? No one thought blockchain or Bitcoin was going to be traded for $1, and now it's at, I mean, even at low ends right now, it's at $36,000.
Yep.
I mean, yeah, okay, so it died if you got in the last 12 months. I'm talking about getting in whenever it was like $30. You know, like I'm talking about getting in early, right? And it may never get to $1,000 or something like that, but if it's 30 and I get to 900, that's a fairly good return.
I like the sound of that. It's a very interesting perspective for the crypto space. So it's now time for the searing Q&A session.
Let's do it.
And since y'all have done such a good job pitching, I don't know if it'll be as searing as it might usually be, but I have to start with you, Ryan. We've talked about these cryptocurrencies briefly. I still don't exactly know what each of these do. So can you give me a little brief breakdown of each of these coins?
Yeah.
And tell me what they do.
Yeah, so the coin is just the investment vehicle.
Yeah.
The technology is what we want. So blockchain technology is basically a technology where you can make decentralized transactions occur publicly instantly, right? So let's take banks as the easiest vehicle to use this technology. You don't have to wire money, you don't have to pay nearly as many fees. But why haven't they implemented it, right? So what we're investing in this specific investment that I'm suggesting is investing in a technology that's going to be able to take blockchain and say, oh, you have a really big issue scaling your productivity to large amounts of transactions. Like I mentioned earlier, Ethereum can only do about 13 transactions a second, right? That's the max capability. And they have the fees that are associated with the gas and all that kind of stuff. But these technologies, the Polygon, the Polkadot, and the Cardano, they're scaling it up to where you'll be able to use the technology to get 100,000 transactions done in a second, right? So it's the scalability that you're investing in. And
so
I don't know if that answers your question.
All three are payment platforms and payment based.
They're blockchain based. I used a payment example, but it could be used in any form of, like I mentioned earlier, transactions, contracts, legal documents. It's just the blockchain itself that it'll be.
Gotcha. So they're full-scale platforms that can be used for any sort of blockchain use case in the future, but they're just more scalable, faster payment processing.
Right.
And the back-end engine is more powerful.
Right. And Polkadot in particular is interesting because they're creating a multi-chain platform, which is basically going to allow all blockchains, because you got all of them out there, right, to communicate with each other. It's a substrate that they've built, and it's basically like a hub. Think of it as a train hub. All the blockchains can connect to this hub, right?
Yeah.
And they'll be able to communicate with each other. So if that functions the way that it's being presented to function, that is a critically important technology that could be used in a variety of, I mean, let's just talk about medical data being transferred from Europe to the US, right? Like it doesn't even have to be currency based, although that's the hot button issue that's happening right now. The technology is what I'm interested in, and the technology is what's going to allow one or maybe more, maybe a couple of them do well, right? To ride out of the crypto coin mania that seems to be happening, right? I'm investing in the tech.
Interesting. All right, I have some more questions, but we'll come back in a minute. It's time to get to Marco. Marco, we're talking about $1,000 investment here. You talked about the power of compounding. What do you say to someone who's looking to get more and who's looking to outperform the market instead of just getting market rate returns with their $1,000. I mean, we think with this premise, we're likely to have a younger viewer, someone who's just starting out, dabbling their toes in investment. So what if they want something bigger, more risk heavy? What do you have to say to them about your investment opportunity?
Yeah, I would say if your risk appetite, which we'll not even risk, right? We'll talk about reward. If your appetite for reward is much greater, you're going to have to risk more. And that's just typically the way the market or any investment works, right? No matter what, your risk reward trade-off is something you have to think about. If you are looking for something that is going to get you greater returns than what the market does, you also need to be comfortable with potentially having greater losses. That means larger fluctuations. And I know a lot of people, even myself included when I was younger, would think like, of course I can do this type of investing because, I don't care if I lose it tomorrow or whatever, because over the long run, I guess I'll make it up. That may or may not be true, and that may or may not be you. Like I said, you have to really take a look at yourself in the mirror and be honest with yourself and say, would I be happy tomorrow if I were to lose all of this money that I have in here? Or do I really need this money to come out for me in the future? If it is something that you truly believe you have a greater risk tolerance for, then this might not be the investment for you. You might want to look at something like the ETFs that run on like small cap, small stocks. Okay. Those do produce a greater return over years than the Spider S&P 500, but they have much larger downswings. And so that's something that you have to be able to brace yourself with and be comfortable with, because you could potentially, like I said, lose 80% of your investment in a day. But if you can rationalize it to yourself and say, if I hold this up for a year, I may be back on top, then that's fine.
Marco, very insightful. These guys are on point. These searing questions. I'm not even making these guys sweat. But I do have one more question for you, Ryan.
Yes.
You've picked 3 coins, what you think is the best investments in the space. They say that a balanced stock portfolio, if you want to pick yourself, is 10 stocks. Between 8 and 10, 10 is the max. Why are you picking these 3 alone and really concentrating that risk instead of pitching a broader portfolio of 10?
Well, number one, because I feel like that if you wanted to invest in other alternative Bitcoin currencies and things like that, blockchains, whatever, you probably need to build a different portfolio. You probably need to do it. I'd structure it a little bit differently. I'd probably hedge those things a little bit differently. You've got Chainlink, you've got ETH, you've got all these different types of currencies that are out there, cryptocurrencies, and they're not playing into the same usefulness that these 3 are. So these 3 are going to be for a specific usefulness. So really, it's not a portfolio. Maybe I miscategorized it. It's more of just a hedging of a bet. It's a large bet, and if any one of those 3 hits, it'll cover your losses, right? So it's kind of like betting on 3 specific numbers in the roulette table.
It's almost the venture capital model, as you're looking for your one bet to cover the entire.
That's a much better analogy than the one that I just used. The other thing that I do want to mention before we get off onto different things is that you won't be able to invest in these in a regular Robinhood account or anything like that. I mean, you get on crypto.com or Coinbase or one of the Binance or one of those. It's really easy. There's a low barrier to entry to use Coinbase. Like they'll walk you all through it. It's basically like downloading Robinhood. But since you're thinking about doing that, if you choose that investment, or if anyone is listening and they think about doing that, you won't be able to do it via a regular stock market.
Fair. These guys have done an amazing job pitching their investment ideas, and I'm ready to make a decision. I'm ready to put my money where my mouth is. And we're going to shock the world. It's my money. I can do whatever I want with it. So we're picking both of these investments as winners today. We're going to allocate our portfolio between both of these investments. So I'm going to tell you what I'm going to do. I'm going to take $600 of the portfolio and make it the base. We're going to buy the Spider ETF, the S&P 500, and that's the base of our portfolio. We're not going to lose that $600. We're going to get our 8% return over the 20, 30, 40-year time frame. But I'm also feeling a little risky. I'm feeling like I want some more skin in the game. I want some more upside. I'm young. I have a long investment portfolio horizon. I'm looking to make some money. So we're going to take the other $400. I'm going to go, I currently use Gemini. I don't think they have these coins yet, so I'm going to have to find another crypto wallet. Winklevice, that's for you out there. Add these coins for us.
That's right.
We're going to do $400 into Cardano, Polkadot, and Polygon, and that's going to round out portfolio. We're going to have both the safe side, we're going to have the risky side, and hopefully over the long term, this episode starts something great. So I'm gonna open it up back up to these guys. What do y'all think of that solution? What are your thoughts? Do you think someone was gonna win today, or do you like this decision?
I actually thought, whenever Marco was talking, that it would probably be smart to hedge a little bit and to invest part of the money in a more stable concept like the Spider S&P 500, and then maybe if you wanted to be a little more risk averse, you could invest in some of the cryptos that I suggested. So I think that's a smart play. It's probably the most well-rounded, the best way to build a portfolio. Yeah.
Marco, what do you think about this?
Yeah, I mean, I don't view it so much as a tie because I did get 600, so I hate ties. It's the worst.
No ties here. No ties here.
Returns, I guess.
But no, that makes sense. I mean, that's what I was saying earlier. I understand. It was $1,000, so it's something that it's a lot easier for you. It's easier for you to put in the market, put it in play because you want to get a return. I think that's a great idea. Like I said earlier, if it's not something that you can really throw around because you're not comfortable putting that kind of money in, then that will be on the safer side. But for this, I think it's a great way of doing it because I like what Ryan said about it's not necessarily the coins that he's banking on to win. It's the technology behind it. So, and he's hedging it between these three because he believes in the technology. The underlying technology is going to propel the future. So, again, much like the venture capital, you only need 1 in 10 to hit, right? And your returns go through the roof, and you have the base. So, earlier, like I said, it's all about what it is that you want for your returns and what you see your profile in. Everyone is playing a different game, and it's about what's right for you. There's a million right answers, but you have to focus on what is the right answer for you. So I like it.
Well, there we go. Guys, I want to thank y'all very much for being our inaugural guest on What to Do with 1K. That's Marco Pena, Ryan Mitchell. Go give him a follow on Insta, whatever social platforms that y'all are on. I mean, you have any final wishes, final things to say to our viewers?
I mean, keep watching the show. There's way more to come where this is started. So enjoy it. It's great content.
Absolutely. And you're going to be seeing these guys more on our Blake's Business Minute channel. Marco, Ryan, we've got some big things planned for them. It's going to be awesome. So if you haven't already, like this video, smash the subscribe button, go to Instagram at Blake's Business Minute, smash the follow button there, go to TikTok, smash the follow button at Blake's Business Minute there too, and follow us to get all the different shows that we do and all the big things coming. Thanks for watching What to Do with 1K, and we'll see you again soon.